Main market, London-listed Roquefort Therapeutics is a biotech company which owns a portfolio of preclinical anti-cancer medicines with the aim of taking the programs through to sale. For more, we're joined now by Ajar Reginald, who's the chief executive of the company. Welcome.
Thank you.
And we just had some breaking news. We're just going into the trading day today, having now heard that you've now got 5 programs under your watch. Before we get on to that, just quickly explain the business profile here and the strategy that you're following.
Yes, so we're an oncology-focused company, and what we do is we develop new medicines for the most difficult to treat cancers. And we're doing that by attacking novel targets, so new targets that haven't been addressed previously, and we're using novel mechanisms. We're using next generation medicines. The rationale behind that is, cancer, there's a lot of research in cancer. The pharmaceutical industry spends tens of billions every year trying to develop new cancer medicines. But this research is focused in very traditional medicines. And so what we're seeing is that new medicines are needed with a new approach, with new targets, with new cell and gene therapies, or new targets such as midkine, which then gives us a chance to kill the cancers that existing medicines can't treat. And that's very important because even now, after all these many decades and billions of investment, there are still cancers where the mortality rate is still very, very high. So, in some metastatic cancers, that's cancers that have spread from the original site to distant sites, the mortality rate is 70% at 10 years. That means only 30% of patients are surviving.
Why oncology, particularly from a business perspective?
I think when you're developing new medicines, the good thing is there's very close alignment between patient benefit and commercial sense. So if you can help patients that don't have any other treatment, then that is an exceptionally commercially viable proposition. So it's a sustainable model. So we target the cancers that are poorly treated currently, and cancer is a huge growth market. Even the metastatic cancers that we look at are in the range of $20 billion markets with a compound growth rate of over 10%. So, doing good, producing good medicines that treat the patients that most need them is good business. As
I said at the top, I'd like to find out more about the business model.
Absolutely.
Part of that is how we're going to return money to shareholders. What's your program? I said you got these programs in place, and I said you've just taken on a new one.
Yes.
How do you reward shareholders? What's the long-term plan to get shareholders on board to take part in this road through to maturity for a drug that you're controlling?
Yeah, I think in this case it's not that long-term a plan. Biotech can take many years to develop, but what we're focused on is creating value quickly and to create significant value. And we've got a track record of doing that. So we're bringing in medicines very early on when they're little more than a good idea. And what we're doing is developing them in a way that potential acquirers would like them packaged. My background was working in a big pharma company, buying companies like Roquefort and buying and licensing programs like the ones we've got. So I have direct experience of how to package them. What are the experiments that we need to do? What's the proof that we need to demonstrate to potential acquirers and potential licensors that these programs work and could potentially help patients in the future? So our model is to take very early innovation and to develop it using our state-of-the-art laboratories, our network of world-class cancer researchers around the world, and our internal expertise. That practical expertise of having taken a medicine from just a good idea into clinical trials. And when you hit clinical trials, these are the key milestones that potential acquirers are looking for.
A couple of words you mentioned there which are interesting: sale or license. So are you looking for joint business partners as well as total sale, or is the ultimate goal just for sale and then move on?
So I think there's 3 different ways we create value, and I think your question was exactly on point. How do we create value for shareholders? We create value for shareholders by doing licensing deals. We've demonstrated that already. We've done a deal with Randox, which is one of the leading diagnostic companies, in a companion diagnostic. So cancer medicines, especially the next generation of cancer medicines, need a diagnostic to identify the patients that will benefit most from your treatment. So doing a deal with Randox was great. The total value of that deal is over £5 million. And that's really not our core business. We did a deal with Randox because diagnostics is an area which is very important, but we're deadly focused on cancer. We really want to produce medicines that will help patients and create value. So having a great partner like Randox is critical. So that's one way you would create value, through licensing deals. The second way is by selling programs. So once we get a program to a certain point, you can then sell that program. And as we were saying, the average value for a program that's been sold between 2005 and 2020 at this early preclinical stage was £50 million or $70 million. So single programs, may have that sort of range of value. And then finally, the reality of the world we're in, the paradigm of biotech and pharma, is that 99% of biotech companies are acquired. And as I mentioned, that was my role. My role in a big pharma company was to acquire small companies like Roquefort. So if we do a good job, we have the tools, and we have the experience, there are multiple ways by which we create value for shareholders.
And of course, you continue to expand. This news out today, so say congratulations, because you're now a 5 lane the company, if you like, aren't you?
Yes.
Explain more about, sure, the initial 4 plus this extra 1 that you're into now. Explain how this is changing things for Roquefort.
Absolutely. So you've asked the critical question, the business model. So our business model is around developing or buying in great innovation and packaging it so that it can be transacted. I think what today's announcement with the new mRNA anti-cancer medicine also demonstrates that this is a real innovation engine. Our internal researchers have been able to generate this new type of medicine. And this is truly cutting edge. There are very few companies in the world, and many of them, Moderna and others, BioNTech, are very famous, very successful, multi-billion-dollar biotech companies that are addressing cancer with mRNA therapeutics. Mm-hmm. So it's a highly innovative thing that we've developed in-house, and I think that demonstrates the innovation engine that we've got in the company. And as I said, couple that to our business model, and this is very positive. So the mRNA complements our existing portfolio. Our existing portfolio focuses on a couple of different areas. One is midkine. So midkine is a novel target. So cancers that express midkine are very difficult to treat, and therefore we targeted and targeted midkine as a mechanism to kill cancer. We have antibodies, and we're in discussions. We've already got 1 licensing deal with Randox, which is around the antibody technology. We're also looking at other partners for that antibody therapeutic technology. The next one, which we've already talked about, is an oligo. So that's a different type of RNA, and we've got some good data on that. And then this mRNA technology comes along. We're able to formulate that. We're able to make a medicine from that. So that really brings out our portfolio. mRNA for midkine is just one of the things that we're looking at. So I wouldn't, our aim is to keep looking for medicines that can help patients. And if we can develop them in-house, that's even more efficient than going out and buying them. And then in September, we acquired Oncogene. And Oncogene had 2 products. Again, another RNA which is focused on a novel target for cancer called STAT6. Again, patients that have STAT6, unfortunately, tumors have a very poor prognosis. And then finally, a cell therapy. So your viewers may know that cell therapies have become the cutting edge of how we treat cancers. And what cell therapies typically do is they augment your body's own immune system. So by enhancing your immune system to fight cancer, you end up with a sort of twofold effect. And that's what our cell therapy does. So it's a great portfolio of innovative medicines that target these difficult to treat cancers.
So as you've now developed this new program, how do you go about funding these new pipelines that you're establishing?
Yeah, it's a good question. So the 4 programs we've already got are fully funded. What's very elegant about this mRNA is it fits very well with our existing oligo program. So it's a very small addition to the existing program of work that we're doing. Frankly, it's something that we're already doing. Mm-hmm. So we were able to announce it because we've got a sufficient data to really say we've now developed it. But that program is in development in parallel with the SSO program already. And so we have all of our programs are fully funded till the end of the year, till the end of that milestone that we're looking for.
Mm. And in the interim, do you think that anything is going to develop which is going to bring more money onto the balance sheet so you can
Absolutely.
do more deals and establish more pipelines like this.
Absolutely, yeah. So we're in deal mode. We're meeting with lots of potential partners. The beauty of having a stable of programs is that each of them are delivering data at different points. Last quarter of last year for us was really about laying the foundations. This year is all about delivering, and that delivery is milestones. So that's real concrete, significant data to say, as like today, here's a new program. Or earlier this year, we said with the antibodies, we've now demonstrated safety. So yes, absolutely, the team is doing a great job, and we're delivering real milestones. Those milestones are a way that partners understand what we've developed, and therefore that is a way for us to then continue our conversations, because those conversations already started with potential partners. And each of these conversations reaches a tipping point. So partners then have enough information to say, great, yes, we'd like to do a licensing deal, or yes, we'd like to buy a program. Or ultimately, it may be down the road that someone comes along and says, actually, all of this is super valuable. We'd like to buy Roquefort Therapeutics.
Just a whole lot, yeah. Let me bring up a share price chart. I think it's the right sort of time to talk about this. This goes back to back end of August last year. In fact, this red vertical line is, I think, the point at which you took over the business.
Great.
Now, you said, didn't you, that the back end of last year was all about establishing the firm ground upon which you want to build. And here we are now from the 15th of Feb, when you were, 6.5 pence. Here we are now, having seen this uplift here. We are just trading before the market opens, when we got this news that's come through. Let me just ask you about what investors are buying into at this share price, now having got this new news out this morning, which you're delivering. What is it that are shares underperforming where you would imagine them to be, should be, because of what you got in the pipeline, or are they on par?
I'm an investor. I invested during the Oncogene acquisition, which is the line in September. So yeah, I would certainly say, from a personal perspective, the shares are underperforming. From a rational perspective, the way you value a company like ours is by looking at either the net present value, the discounted cash flow of future products, in which case we're certainly underperforming, or look at comparables. And I think we've been very open about what the comparables are. If you look at all biotech companies that were acquired between 2005 and 2020, the data set's about 330 companies. The average valuation of company at our stage of development, so the preclinical stage of development, was £55 million or $71 million. So typically that's what a company like ours would be valued at, either for a single program or for a couple of early programs. So, if we deliver our milestones and the data for the last 15 years is accurate, that might be the sort of valuation you'd minimally expect to see.
And of course, you've got the current share price giving you a market valuation of just over 10 million. So I get what you're saying in terms of the total value. Just as a matter of background and the economy, does a company like Roquefort Therapeutics have any downside for interest rates, for example? We've seen interest rates rise, and there's no evidence that the Bank of England is going to stop. We've got inflation going up. There are costs rising for everybody in every single way, shape and form, whether it's wages or raw materials or whatever. How does that impact on a company like yours? You're innovative, you're driving ahead with things people haven't seen before, and you're looking for deals that no one knows yet that are going to develop. So It's very difficult. You're peering into the horizon, which is a little bit sort of misty.
Yeah.
But at the same time, you've got to deal with rising interest rates.
Yeah, I mean, fortunately or unfortunately, I'm older than I look. So I started a group of companies back in 2009 when it was a worse market than today, and investors that joined me on that journey were able to, this is in the public domain, were able to buy shares at £1 and sell them at £100. So biotech tends to be countercyclic. The value, big pharma has made a huge amount of money through COVID, so through COVID vaccines or through therapeutics. So they have a huge war chest. The key mechanism, the ecosystem that pharma works on, is they buy small companies. That is fairly immune to economic turns, because big pharma's model is they buy lots of little innovative companies. Those innovative companies bring the medicines in the future, and they're very good at marketing those programs. So our 100% focus is delivering the package that big pharma is looking for, whether that be single programs or a whole company. If we're able to develop 2 or more programs, then that will take us into a different valuation range. I'm not talking about share price, I'm talking about company value. And that's really what people like, me and my team are good at doing. We're good at developing programs and then packaging them in a way that's very easy for potential acquirers or partners.
Okay, let's wrap all this up and bring it together and ask you the final question about 2023. We've now got the best part of almost 3 months under our belt now, but how do you see the rest of the year developing?
More of the same. As I said, we've really focused this year on delivering value, and value for us comes from us executing against the programs that we've talked about. We spend a lot of time in the lab developing medicines. I spend a lot of time also speaking to big pharma companies at conferences, at meetings, describing what we do, and that is from a standing start. Very few people knew about Roquefort Therapeutics last year because we're a new biotech company. So fortunately, we have a strong network in our potential partners and our potential acquirers. People are becoming knowledgeable about what we do. We're presenting at the leading conferences in the world in terms of cancer medicine. And so that process is ongoing. Tangibly, over the next few months, what we'll be able to do is we're going to demonstrate progress with each of our programs and more licensing deals. That is our goal.
We've got to leave it there, but thanks indeed for joining us. Agile Reginald, the Chief Executive of Roquefort Therapeutics.